We're once again dealing with a higher oil price, so 90.70 is where we trade on Brent, up by just shy of 3%. We're already seeing that ripple through bond markets, slightly higher yields. How's that going to go down when it comes to the equity market session, do you think?
Yeah, I think we're clearly heading in the wrong direction in terms of negotiations, and that's kind of been the bias in the past few weeks, where you saw the oil price bottomed actually at the beginning of July. Now, I think what's changed is we've had material escalation in recent days with two very key points for markets, in that the Strait of Hormuz is essentially closed again. There's no traffic really going through. And then the second point is oil infrastructure is being targeted again. And so the bias is clearly higher oil prices from here. I think maybe we don't get to the kind of $120 a barrel on Brent that we had previously, because we know there are mitigating factors, demand's being destroyed in terms of China's demanding less, but you also have supply going around Saudi Arabia. You have supply coming out of the U.S. from exports. But it's clearly a very worrying backdrop for equities when you also have these kind of wobbles within the tech trade, and that's a negative for growth when you have higher prices.
Yes, and where do the wobbles in the tech trade leave us then? Because actually, Anthony was right to point to all the volatility we've seen in Korea and some of the other markets overnight, but actually the Asia session looks overall quite calm compared to what we'd become used to in other weeks. So we're down by 0.3% on MSCI Asia Pacific. US futures look pretty flat. Nasdaq futures up 0.1%. So where does that leave us in terms of sentiment around the tech trade?
I think it's unsteady is the headline. What we've seen is that we know AI will be transformative and that there will be companies that will be hugely profitable on the back of that, but we don't know who the winners and losers will be. And no company has a monopoly, right? So you have huge amounts of spending, and the question is what companies will actually benefit from that on a return on investment perspective. And Moonshot feeds directly into those worries that maybe U.S. companies won't be the ones to benefit. I think we've had some of the froth come out in that if you look at positioning in, say, leveraged ETFs, that's not at the peak, but we've been building for so long. It's been months and months that you've seen debt margin rising in the U.S. And in June, that number was 50% higher debt margin year on year than previously. And so while, we're not having a turn from a more fundamental perspective in terms of we haven't seen negative earnings, that would mean you're more worried about a pop of the bubble. Certainly when you do get downside, because there's so much leverage, the worry is that's quite big.
We're going to hear a lot about US big tech this week, aren't we? That's part of the earnings story. Then here in Europe, maybe proving the rotation trade is part of our narrative around earnings. So what are you watching for this week when it comes to the earnings drama, Skylar?
Yes, the earnings is a really tough backdrop for these companies to compete on in terms of we had TSMC last week. It was very strong and the stock was still down on the day. And I think it's a very high bar for that profitability to come in quite high for actually a rally. So I think you're just trying to get through without selling off significantly and making sure that you're not having that kind of peak, and seeing what CapEx plans really look like is the important bit there.
Okay, Skylar, thank you very much. Skylar Montgomery, Koning, with the latest on markets. And remember, you can find the Markets Live team. MLIV Go is the function to find Skylar and the rest of the team on the Bloomberg terminal.